When you hear gold price astrology, you probably picture some crystal ball gazing mystic trying to predict the market. But the real story is so much stranger, older, and more revealing than you could ever imagine. Before we dive in, make sure you hit that subscribe button and stick with me to the very end, because what you're about to learn will challenge everything you thought you knew about financial forecasting. And when we're done, I need to hear your thoughts in the comments, because this is a topic that absolutely demands a debate. The link between astrology and gold didn't start on TikTok or in some modern trading forum. Its roots go back thousands of years, to a time when gold wasn't just a metal, it was considered a divine object. In ancient Egypt, gold was believed to be the flesh of the gods. In ancient China, it symbolized immortality and the cycles of the heavens. You see, early civilizations didn't draw a line between wealth, astronomy, farming, and their view of the cosmos. They saw the universe as a grand machine moving in synchronized rhythms. And gold, being rare, beautiful, and incorruptible, was a physical anchor to those powerful rhythms. Let's jump forward to the 1500s and 1600s. Early European astronomers, many of whom were also practicing astrologers, held a fascinating belief. They thought precious metals were directly controlled by planetary forces. Gold was assigned to the sun, silver belonged to the moon, iron was linked to Mars, tin to Jupiter, copper to Venus, and of course, the metal mercury was assigned to the planet Mercury. They theorized that when certain planetary cycles aligned in the sky, the abundance and even the value of these metals on Earth would rise or fall. It was a perfectly logical system in their worldview, and where the heavens and the Earth were deeply interconnected. By the 1800s, this kind of astrology had faded from mainstream science, but it found a new, secret life in the world of finance. Early commodities traders started noticing something strange about the markets. Human behavior, all that fear, greed, optimism, and panic, seemed to move in repetitive waves like tides. They couldn't explain these patterns with the data they had, so many of them turned back to the old ideas: cycles, moon phases, solar activity, and planetary patterns. A legendary example of this is a man named W.D. Gann, a trader from the early 1900s whose methods still baffle experts today. Gann was famous for his uncanny ability to forecast market tops and bottoms with incredible precision. And he openly said that his models incorporated geometry, natural cycles, and celestial timing. Many modern traders are convinced that Gann was secretly using sophisticated astrological calculations, even though he never admitted it directly. But honestly, whether he did or not is almost beside the point. What truly matters is that people believed it worked. And in the financial markets, perception alone can be powerful enough to move mountains of money. And that right there is the real secret behind all of this. It was never about astrology actually moving the price of gold. It was always about traders moving gold based on their shared beliefs. If a critical mass of traders believes that a certain astrological event will cause a price spike, they all buy in anticipation. Their collective buying action is what creates the spike. It becomes a self-fulfilling prophecy. The belief system itself becomes the market-moving force. Now, here's the part that blindsides most people. Astrology-based financial forecasting still exists today, but it operates in the shadows. You won't hear a hedge fund manager admit it on TV, but some privately consult timing models that are tied to lunar cycles, solar periods, or what they call planetary financial harmonics. Why? It's not because they believe in magic. It's because they understand psychology. Think about it. Market sentiment often shifts around predictable cycles of human behavior. We see it with end-of-month portfolio adjustments, early-year optimism, the tension before major elections, fiscal deadlines, and the flare-ups of global political conflicts. Astrology, whether by pure coincidence or by tapping into ancient observations of human cycles, often overlaps with many of these patterns. For instance, some studies have suggested that when the moon is full, retail trading activity tends to become more volatile and emotional. When there are major spikes in solar activity, historical data has shown correlations with increased market anxiety and a risk-off sentiment globally. Is there any proven causation? A direct link where the moon's gravity or solar flares are flipping a switch in our brains? Absolutely not. No scientific evidence supports that. But for a trader desperate for any kind of edge, correlation is often good enough. And again, if enough believers decide to trade based on that correlation, they create the very outcome they were expecting. This is precisely why astrology refuses to die in the world of gold trading. Gold is, at its heart, an emotional asset. Its price thrives during times of crisis, fear, uncertainty, war, political instability, rampant inflation, and currency collapses. These are the exact moments when human beings tend to become irrational. We become desperate for patterns, for order in the chaos. Humans hate randomness. We crave cycles, explanations, and predictions, even if we have to invent them ourselves. Astrology provides a framework for that. It doesn't offer pinpoint accuracy, but it does offer a narrative, a system that seems to make sense of the nonsensical. Its real power is psychological. It hands anxious investors a map, giving them a feeling of control in a world that feels completely out of control. But this leads us to a very uncomfortable and practical question. If astrology can't truly predict the price of gold, then what actually does? If the planets aren't in charge, who or what is? And that, my friends, is where our story takes a sharp turn, moving away from the mystical and into the brutally practical realities of the modern financial world. You've probably heard it on social media, maybe even from a friend. Gold is going to the moon because Mercury is in retrograde. Or, this lunar eclipse will make gold prices explode. It's a fascinating idea, this blend of ancient mysticism and modern finance. But today, we're going to cut through the noise and reveal the hard, cold truth about what really moves the price of gold. And trust me, the reality is far more compelling than any astrological chart. To truly understand gold, you have to strip away the mythology and see it for what it is, the world's oldest and most reliable insurance policy. Think about it. Unlike a stock, gold doesn't depend on a company's earnings. Unlike a bond, it doesn't pay you interest. And unlike real estate, it doesn't generate rental income. So where does its value come from? It's simple. Gold's value is forged in the crucible of human emotion and government action. It's a direct reflection of what we fear, what we trust, and how governments behave when they start to panic. So, if it's not the planets, what's the number one driver of gold? It's a concept called real interest rates. It sounds complicated, but the idea is straightforward. Real interest rates are just the interest you earn from a safe investment, like a government bond, minus the rate of inflation. Let's say a bond pays you 2% interest, but inflation is running at 3%. Your real return is negative 1%. You're actually losing purchasing power. This is where gold shines. When real interest rates are negative, when holding cash or bonds means you're losing money to inflation, investors flock to gold. Why? Because gold is a store of value. It's a physical asset that can't be printed into oblivion by a central bank. This single factor explains the massive surge in gold prices we saw after 2020. Central banks around the world, especially the U.S. Federal Reserve, printed trillions of dollars to combat the economic fallout of the pandemic. This unprecedented money printing unleashed a wave of inflation. As inflation soared, real interest rates plunged deep into negative territory. Suddenly, holding government bonds was a losing game. And what did investors do? They ran to gold. The price didn't just climb, it exploded. It wasn't Mercury retrograde, it was basic economics. When keeping your money in the bank means it's losing value every single day, gold becomes your safe harbor. Every sophisticated investor, whether they admit it or not, understands this fundamental relationship. But that's just the beginning of the story. There are much deeper, more powerful forces at play right now, forces that are reshaping the global financial landscape. One of the biggest secrets that isn't really a secret is the unprecedented gold buying spree by central banks. And we're not talking about small purchases. Countries like China, Russia, Turkey, India, and many other emerging markets are buying gold at a pace we haven't seen in decades. Why are they doing this? Is it because their leaders are consulting astrologers? Of course not. They are buying gold for one simple, powerful reason. They no longer fully trust the US dollar as the sole anchor of the global financial system. For over half a century, the dollar has been king. It's the world's reserve currency, used for everything from oil trades to international loans. But that dominance gives the United States immense geopolitical power. The US can impose sanctions, freeze assets, and effectively cut entire countries off from the global financial system. This is where gold becomes a strategic weapon. When geopolitical tensions rise, gold is the one asset that no single country can control, sanction, or block. It's a neutral, sovereign asset. China isn't buying hundreds of tons of gold because Mars is aligning with Jupiter. China is buying gold because it's the only major financial asset they can own that America cannot touch, freeze, or devalue at will. The same is true for Russia, which began aggressively shifting its reserves from dollars into gold long before the sweeping sanctions of recent years. They saw the writing on the wall. For these nations, gold isn't just a shiny metal. It's a declaration of economic independence. It's political power disguised as a commodity. This brings us to the second major force driving gold's recent ascent, currency stress. Look around the world. Governments everywhere are buried under mountains of debt. To fund their spending, many are resorting to the oldest trick in the book, printing more money. When a government continuously overspends and inflates its currency, it erodes public trust. People start to realize that the money in their bank accounts is losing its value. Gold becomes the emergency exit. This is the key to understanding why gold has been hitting new all-time highs, even when interest rates have been rising in places like the US. Normally, higher rates should make gold less attractive. But these are not normal times. Investors are looking past short-term interest rates and seeing a world plagued by instability, unsustainable debt, and deep geopolitical fractures. They see the trust in traditional government-backed currencies beginning to crack. Fear is the dominant emotion in the market right now, not greed. And when fear takes over, gold thrives. Astrology has absolutely nothing to do with it. Gold is simply reacting in real time to the growing instability of our global systems. So if you really want to predict where gold is headed, forget the horoscopes. Start watching central bank purchases. Pay attention to government debt levels, geopolitical flashpoints, real interest rate trends, and global liquidity flows. The answers are all there, written in plain sight in the language of economics and power, not in the stars. But here's where things get really interesting. There's a fascinating twist in this story. While astrology itself has zero power to predict gold prices, the belief in astrology can, and does, influence the market. In a world where high-frequency trading and complex algorithms dominate, it's easy to forget that markets are still driven by humans, and humans are not always rational. We are driven by beliefs, emotions, and patterns. Here's how it works. During major astrological events, like a solar eclipse, a full moon, or the infamous Mercury retrograde, we often see a noticeable spike in trading volume in certain assets, particularly those popular with retail investors. The effect isn't supernatural, it's purely behavioral. A segment of traders who believe in astrological timing all decide to act at the same time. They believe a certain cosmic alignment is a buy signal, so they all rush into the market together. This creates a temporary self-fulfilling prophecy, a short burst of buying pressure that can nudge prices up. The same can happen on the selling side. So, in a strange, indirect way, astrology can affect gold. Not because the planets are exerting some mystical force on the metal, but because a group of people believe they are, and they coordinate their actions based on that belief. That's the ultimate irony. The planets aren't moving gold, people are. So, what does this all mean for the future of gold? The conclusion is clear. If we want to understand where gold is going, we don't need to look up at the heavens. We need to look around us, at the political fractures widening between nations, at the debt crises looming over major economies, at the persistent waves of inflation eroding our savings, and most importantly, at the slow, steady erosion of trust in our global financial systems. Gold doesn't rise because the universe whispers a secret into the ears of a chosen few. It rises because humanity seems doomed to repeat the same financial mistakes over and over again. Financial instability is the only true cycle that matters here, and that's why gold will always have a place in a smart investor's portfolio. It's not about getting rich quick, it's about preserving wealth when everything else seems to be falling apart. Gold is the last refuge. The real prediction for gold isn't written in the stars, it's written throughout human history. When trust in institutions dies, gold rises. And if you look at the current global trajectory, the rising tensions, the staggering debt, the move away from the dollar, it seems very likely that we haven't seen the peak for gold just yet. Stay with us, because in our next videos, we're going to dive even deeper into the real forces shaping your money and your future. If this video opened your eyes to a new way of thinking about gold, let me know your thoughts in the comments below. This is a conversation we all need to be having. Thanks for watching, and don't forget to subscribe for more insights you won't find anywhere else.